following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent day at the headquarters of technical trading and investing. It is TFNN.com. And, got a nice day headed out here. Had a little bit of a hiccup in the morning. S&P futures were way off. They pretty much recovered. We're off about 2 points on the S&P cash. And when we look at the volume starting today, as we normally do, about 2.3 billion shares. So still one of those days where there isn't a whole lot of volume. It's a good day, but nothing like we saw on those heavy down days. I know a lot of people are expecting a big rally out of here. I'm one that has pretty much decided to stay short for a while. We may get a bounce out of here, but I have a feeling that it will be problematic to keep a position in these markets. I think they're going to be incredibly choppy over the next 60 days, and I basically picked my position and sticking with it, and I'll put my stops in to preserve my profit so far on the short side, and that'll be it. But we are moving along. Let's see if I can actually get, okay, there we go. We're finished. For some reason, I've got something up here, but it's very slow to load, so give us just a second. Okay, come on. There we go. Finally. Okay. Today in history was the first monthly Social Security check went out in 1940 on this day. Issued to Ada Mae Fuller. She had just retired. She had paid in a great deal in the 3 years before she retired. She paid an accumulative total of $24.75 in Social Security taxes. She got out $22,888, showing probably one of the biggest problems with Social Security and why it would come to have problems in the future. Certainly an inauspicious beginning to a program. A lot of people like it, but the numbers just never have paid off. I'm pretty much sure that when I get to be 67 or 70 or 75, whatever the retirement age is, by the time I get there, I think it's going to be like Catch-22, the actual book, and in the movie. Every time you just about got to the 25 missions and were able to go home, it was 30 missions. It's going to be 35 missions. Basically, there won't be any money for me in Social Security. It's just a giant Ponzi scheme, and proved right out of the gate in this day in 1940. Of course, we talked a little bit about being down over 20 points in the S&P cash this morning. It's been trying to recover most of that, and again, let me update this just to make sure. But trying to update all of this stuff. Let's see what we have here. We're off 2.5 points on the S&P cash. But a lot of people were not actually giving a reason why we started to have it. But the banks were down, some of them 5% this morning in Europe. Most of them closed down a point and a half, or 1.5%, let me put it that way. But it was a lot of these banks that are getting scared. Next week, I would not be surprised to start hearing about problems in Russia. They have economic problems coinciding with their, of course, all their Olympic activities next week. But maybe they'll be able to keep them out of the paper. But the country I'm now hearing is going to be the next one that starts having some hiccups is Russia, and they're thinking maybe even next week. So keep an eye on the markets. Fund flows. I'm not real worried about any higher prices in mostly in the markets. If it does go up, I think it's going to be very minor. Especially, we're getting into fund fund buying season here. And, of course, this is the second day of fund buying. Had nothing yesterday. But Trim Tabs, if you're not familiar with them, keeps a record of inflows and outflows. And we've had pretty much steady outflows since the beginning of the year. And that probably means that there won't be a lot of fund buying coming in. They'll still hold the prices up. There'll be somebody buying out there. And if a fund's buying, they ought to be buying at the highest price of the month, Wall Street thinks. And we'll be looking at it, but just keeping an eye on it. So we're going to get into charts here fairly quickly. We've been talking about Apple for the last few days, and how you wanted to actually be watching Apple. It once again looks like we've had at least at the confluence level, and is that it? What do I have? 2 years, 6 months. What are we doing here? What is going on here? Oh, there we go. Someone's been playing with my toy here. So anyway, we're looking at that confluence level that went to 496 to 502. It did dip down as far as 493.55 is that? And it has found that it is support through today. Probably going to take a few more days for it to bounce and then possibly try to go through there again. A lot of reasons for Apple having problems. Went through it in the Tech Insider today when I emailed it out, and what can you say? Apple is being Apple, but certainly I think I talked about it, a bit about it yesterday on the show. It is all about margins, and the question is, if they do come up with a new product, is it going to have anywhere close to the margins that the iPhone has? And that is going to be probably one of the hardest things to do in the future. Google came out, was after the bell last night with earnings, was down a little. Then it started rocketing, and the reason why, of course, was the whole issue about and finding the stock split. They've been in battles for about 3 years, maybe 3.5 years, with investors on how they can stock split. The owners or the founders of the company don't want anybody coming in like a big hedge fund guy like Icahn telling what they can and cannot do. They want to be able to have total control of the company and ignore, for the most part, what Wall Street says for them to do. Facebook actually came public with that in their charter. There's absolutely no way you're going to get Mark Zuckerberg out of the CEO chairman spot unless he wants to go or he dies. There's only two ways out for him. And Google is basically changing their charter in the same way. They're going to add and split a lot of these shares, but the way it's going to work is they're going to have all the voting shares, i.e. the people in the executive offices of Google, the original founders. Everybody else is going to get these C shares that have non-voting rights. That's going to include shares that they give away to their own employees as compensation. So as they continue to sell these shares, they're going to be able to sell shares and not have to worry about anybody else getting more than they do. But certainly popped up fairly strongly today. Not a lot of volume. Again, stock splits, 6 of one, a half a dozen of the other, really don't change much. The big difference is going to be, though, if you had to buy in 100-share lots, like some brokers command you to, then, of course, buying a 100-share lot of a $1,200 stock, a lot different than buying a 100-lot share of a $5 stock. And they want to get more people down on the ground floor. But for the most part, this has made Google highly owned by what are got to be think of as stable investors, funds. They're not going to be people getting in and out real quick. I think what we're going to see is after the split that we're going to see a great deal more of volatility in Google as we get a lot more individuals going and buying Google. CMG is another one of these that popped out rather wildly. it is very strong out here. Today, it's strong with a force. Gapped up certainly on the 18th of October for the last earnings, now gapping up yet again, and this time about the same lot. So certainly a gappy little guy. If you get one more of these gaps up with this, probably about $30, $35 trading range, this could, too, be one of these three gap plays that comes back and collapses on itself. But you'd be wanting to watch that. But now that you have two of these, it is going to be problematic to not wait for a third. What can you say about that? Certainly it has volume. Certainly it has a wide price range from yesterday's close. The whole idea, though, that they can continue to make the promise of non-genetically modified foods seems to be somewhat in peril, but certainly above previous highs and with higher volumes. So just about everything you are looking for. Do we have a caller on the line? Why don't we just go to a caller and I'll find out who it is. Who is this?
Yeah, this is Lou.
Lou, and where are you calling from?
Nashua, New Hampshire.
And how are you doing today?
All right. How are you doing today?
Another day in paradise. If you're a duck, because it's raining down here. But but anyway, what would you like to talk about?
The euro.
Okay.
Where do you see that going?
I have to tell you right now, it is all independent on headline news with, especially with the problems I've seen. But I'm pretty much in the camp now that's betting that Europe is in a deflationary spiral. So I think we could see continuations of a stronger euro.
Oh, wow.
I mean, what I've read today and this morning about the gap down and the problems with the banks over there certainly looks to me like they've got deflation. Now, a lot of people have been talking about that over here, the possibility of seeing deflation in the United States. But everything I look for looks a lot like deflation in Europe. And they are, especially after the announcements of Turkey and some of the other minor states over there raising rates dramatically, I think you're looking at an economy that's going to slow down, at least on the edges. Probably not Germany. Germany seems to be doing good, but they're the last bastion of somebody that has any strength over there with their currency and everything else. Of course, they're part of the euro, but it's going to be tough. So right now, I would say that the dollar wants to go much higher, but the problem is that with the raising interest rates in Europe, it's going to be tough.
Right, so a shot in the euro would not work.
I'm thinking it's going to go sideways for a week while China is on vacation. So I'm not looking for a lot of moves in the indexes that way.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, had somebody in the den ask if I could look at Kuaihu, which is one of those Chinese internet stocks. Of course, all of these things have been on a run since the thought of the biggest IPO of all time from Alibaba in China coming out. Now, what we did find out in Yahoo's earnings this week was that, let's bring it up here real quick, was that they did disappoint. Only about $12 of the share price has anything to do with Yahoo. Used to trade at 15, which makes me think it's still pretty sucky. What you do have, though, is a company going public in China that will probably be the biggest IPO of all time, I imagine, for probably the next 50 years. It just looks like the bubble is just ready to burst over there in China. But what we did find out is they did gap down on fairly heavy volume. They're up a little bit today. And again, it is all about Alibaba and China IPOs over there. So when we start looking at companies like Kuaihu, the first thing you want to do is look at Baidu and see how it's doing. Of course, this is the first day of the Lunar New Year vacation, so China is going to be closed all the way through next week. There's not going to be a lot of news out here. My guess is this is going to, a lot of these stocks will probably go sideways, and then you're probably going to have a huge move that Monday when we do come back. And we're going to get a lot of action when China does come back and get caught up. But the stock market, pretty much everything's closed over there. I posted some of it in the den, and that is that this is kind of like their Christmas time. All the families get together, but it is one of the few vacations that are mandatory in China, and interesting. So the question was looking at Kuaihu. Of course, This thing is just going above the previous September 11th high at 94.90 that had 4.1 million shares. So you want to find 4.1 million shares. You kind of got that yesterday, 4.7 million shares. Light today. And my guess is that these stocks are probably going to hold up until Alibaba goes public. Although there's a couple others trying to race in front of Alibaba and get a little bit of that love before they suck up all the oxygen in the room, and I think that they will. But Baidu certainly had bad earnings. The other bad news, at least, where's that at? BIDU had bad earnings and kind of dropped, especially that gap down, I think, was the bad day we had here in the market, but came down with volume. And this one's the one that makes me think that's going to even out Kuaihu on those. But there's not a lot saying the exact same thing in China, and they're going to probably go, I bet they go sideways for a week while we wait for them to come back. Just not a lot going to happen in China this week, and I think we're going to see the markets move kind of sideways next week during fund buying for the first few days, and then I think we're going to head back down. I think 1,800 could be the high, and that would be it. So I'm not looking for a whole lot up out of this marketplace. They've tried to come down and break out that bottom twice, and I think the third time is going to be the charm. Got a question in the den. Where is Amazon a buy? Fundamentally, or the next level? Amazon probably, boy, that's awful tough. AMZN. I think the thing's worth about 120 to 200 bucks in reality. But as long as they continue to make no money, pretty easy. I think it's going down to 1340 to give a non-flippant answer, and that is 343. 35. There's the gap there with all that volume. I think it just wants to come back in there and hit that a little bit, and then that'll be it. I think you're probably going to find a floor in there, but with the heavy volume today and the big gap down, I wouldn't see any problem with this thing getting to 335. And that, what was that gap that day? The 25th of October, you had 12 million shares on that gap up, and certainly, what was the close the day before? 332.21, so 335, 337, probably somewhere in that area is where you're going to find support. And certainly you have a lot of volume, but you're exceeding that volume today already. So I don't put a lot of hope into Amazon. I've always said the worst day that they're ever going to have is going to be the day they make money, because then someone has something to evaluate them by. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And as we come back, why Google and Amazon and CMG get a lot of attention. One of the big winners out here today was Wynn Resorts. Their numbers came in very good from Macau, and this thing's up to its previous high on heavy volume. So you've got just a slightly higher high out here by a little over half $1 so far. But you're going to have to be watching this thing fairly closely. You'd want it to close above that 216.99 previous high that we had just not too long ago, January 21st. Certainly looks very good, but what you want to watch out is this does not close back below this 217 level again, because a lot of these are just like we've seen over the last couple of months. They get up to these highs, have a lot of volume, and then just roll over hard, and then come back once again and retest the highs. And at that high, almost the third or fourth attempt at these highs, that you get the answer whether these things can actually go higher. It's not uncommon to see high volume highs out here just fizzle. So it has been rather different. But when Resorts are doing well, and of course earnings from Macau will be nice. I have somebody saying it will roll over. I don't know. It's just these patterns have not looked good. What you don't want, I'll tell you what you don't want, is this thing closing under a 9-day or a 3x3 displaced moving average. This is one of the biggest double repo pattern setups. And all good and well, it's up here on light, heavy volume. But if this thing was to roll back over and below that 3x3 displaced moving average, I think I'd be shorting it. There's probably a good indication that all the good news is already in the stock, and you need to watch it like a hawk. But this is one where any kind of even minor weakness on this could get it to close back below, and it wouldn't take more than a few days where if it would close back below 208, would get you back possibly to 157.48. So a very, very scary chart in any weakness on it. I'm not predicting the weakness, but I am saying that if this thing does show any weakness, 157.48 would not be a problem to come back to on this. So you'd like to send this thing with, it's got heavy volume and a great candle out here. You'd like this thing to probably close a buck or two above the previous high. Walmart, part of the problem this morning, at least in the States, WMT, came out with a warning, and has been pretty much recovering all day long. Everybody can't wait to buy something, no matter what it is. We've got a phone call, I think. Somebody waving a phone at me, but nothing in my IM. Huh? Nothing in my IM. Anyway, who's on the line? Caller?
Hello?
Yes, go ahead.
Hi, David. How are you?
Pretty good, but my engineer, I think, can't figure out that he's typing in the wrong IM window, and I'm not seeing anything here. So go ahead.
I'd like you to take a look at LinkedIn. I don't have a position right now, but actually I was thinking of it on the shorter side. So
you know, if I was going to short something, it certainly wouldn't be LinkedIn, and that would just be my opinion. They get paid by businesses, and they figured out their business model very well. Unless I found something changing in their business, it's going to probably be one of the better ones in all of technology. There's a lot of other companies out there that make no money, like Amazon, for example, that, you know, just how much money they spend depends on whether they gap down 30 or 40 bucks. LinkedIn, I'm just trying to figure out where the real surprise comes from. They did well when unemployment was high. They've done well when unemployment was low. And they seem to be probably one of the better run companies. You know, normally you want to find a company that has super high valuations, which their valuations are good, but not that high. You'd like to have one that has some kind of intrinsic risk. I really can't find a lot of chinks in the armor in the business model. Is there something that you think about LinkedIn that makes you think short?
Well, today I've been watching it for a long time, and today I've noticed that it actually is going up on not a lot of volume.
Yeah, I can see that it probably has risk back to 199. I'm just not wondering if that's just not enough for me. There's just not enough meat on the bone out there.
Yeah, that makes sense.
That would be my thing. There's so many of these stocks that have given extra clear signals out here in the marketplace. I brought up a couple of ones that I'm short on now that have done well. I'm thinking that we get one more breakdown, and then I'm going to cover some of these. But you know, I brought this one up, and I'm just wondering, is there any kind of signal that I'm missing in this about, you know, a test of previous high on lighter volume or something else? I really dislike the fact that what you have on this one is the December 10th high. You had 1.7 million shares, but you almost got to it on the January 16th with 3.9 million shares. So I still think you could get back up to that 234, and maybe if all the volume then kind of fell out, maybe I'd think of this one as more of as a short candidate. Hang on a second here. I'm trying to pull something up. I can't walk and chew gum at the same time, like Larry says. LOPE. I just couldn't remember the symbol. I'm short it, and I can't remember the symbol on it. Had to look it back up. This one gave me the perfect signal. It came up, tested the previous high on 25% of the volume. So I pulled the trigger short on this. I'm still short at 50 bucks on the thing. And that's what I'm just saying. I don't see anything in here in the trigger that says real light volume at one of these peaks. And the lows aren't that much lower. This one has a low down here at 42.16, which is the one I'm hunting. I think I'll probably get Monday or Tuesday. It's down today. Really didn't come back from the lows this morning. And to me, that maybe is a better indication than LinkedIn. I'm trying to see if there's anything else in LinkedIn that I'm not looking at here today. LNKD. So I'll pull it back up. I mean, this looks to me like this thing is going to look, and even if the market pulls back, there's a gap that's probably going to act at support at the lowest about 190.
Okay.
So I did not enough meat on the bone. I don't like that it's got the higher volume high, even though it didn't touch the high back out here. You know when earnings are on this?
I think it might be the 6th.
Earnings date. Let's look it up just real quick to make sure. You know, the thing is, especially this stock has a history of ramping into earnings.
Right.
And did I not? Oh, there it finally comes. This machine is just running very slow today. You're right, February 6th. So, you know, that would be one other reason why I wouldn't short it.
Right.
This thing's probably going to slowly go back up. So if you take a chance on this thing, it's probably going to have to be after earnings.
Right.
And maybe it pops up there and maybe it falls out of volume at 240. And, you know, let's say it gets up there with 1 million shares, maybe at that gap at 245. You see which one I'm talking about?
Yes, yes.
Maybe you could pull the trigger, and then you'd have a range of $50 on a $250 stock. That makes me think that maybe that might interest me a lot more.
Okay, thank you so much for your analogy.
You bet. Thank you, Janice.
Bye-bye now.
Bye. So, what can you say? Give me a call. Be like Janice. Don't be like my engineer who keeps poking in IMs on the wrong IM channel, apparently. Put them in my channel, and then I'll know who's calling. She's from Bucks County, wherever that is. I forgot to ask. But anyway, you can give me a call at 877-927-6648. And, you know, I'm looking at the shorts I have. They're all still down on the day, which is making me feel a little bit better. A lot of individual stocks. And, what can you say? There's a few of them that have been kind of interesting on earnings. We looked at Walmart. Oh, I was going to look at a few others out here that I looked up during the break, so give me just a second. Wanted to look at Matt, which is the kids game company. Talk about a stinker of an earnings report. This thing is just blown away everything today. Let's go a little bit farther black. This thing's got a big gap at 32, and I think it's headed right for it. That gap came up on the, June 17th of 2012 with 13 million shares, and it looks to me like all these stocks that eventually do, they are coming right back down to that level. So you've got probably another $5 down. The energy out here, probably enough to make this thing go sideways for a little while, and I'm looking at this maybe it is an exhaustion move in Mattel. But, you know, you've got Christmas over. A lot of the stuff that they had at Christmas, if you look at the report from the earnings, didn't sell all that well, and you probably got till September or October next year before they really get back in the cycle. I think this one really looks like it could continue meandering down to that $32 level, maybe even spend the summer there. So it doesn't look all that good. Again, give me a call at 877-927-6648. Oh, from Pennsylvania. Apparently. Bucks County, Pennsylvania. That sounds right, doesn't it? Bucks County, Pennsylvania. Sounds like a real place. Doesn't sound like a made-up place. So, what can you say? Interesting. LinkedIn already peak on monthly. LinkedIn always sends email trying to use their premium service. Just reading some stuff in the den here. So, what can we say? Let's go back and look at the price and volume of the major markets out here to see what we've got going on. For the S&P, 1793, so we're getting close to flat. Volume has really died over the last 2 hours. We're just up to 2.5 billion shares on the consolidated tape. So going to be a light volume day out here on the S&P cash. And, of course, just a little bit of everything for everybody out there. Enough Mattels on the downside, a few Googles on the upside, Amazon to the downside, CMG to the upside. So we've got a little bit of everything, probably making everybody happy. But on the margins, I'm pretty happy about the way today turned out. Oh, I wanted to look at a few other stocks. We looked at Amazon. Symantec is off 3.8%. What else did we have? Cree's off 2%. A lot of these stocks up and down. We took Citrix Systems off. It's up back again. This thing cratered hard. CTXS. I actually looked at their software and played with it right before Christmas. They have a lot of good stuff out here, but apparently it's not doing all that well. Hammered down a low 51.18 yesterday, getting a little bit of that gap back out here today on the oversold bounce. But certainly, I was talking to this sales associate on the phone, and I said, "You know where this thing's going?" And he said, "Where?" I said, "Back to that gap," and boy, did it. I got to give him a call again just to ask him. He was wondering whether he should sell his options on these right then, and that was at the it was going to be about a week before Christmas. So let's go back and see where he. It was probably about the 15th. So yeah, he would have done pretty well if he would have sold then compared to today. But they've got a lot of software, that GoToMeeting, GoToPC, a bunch of different stuff out here. But certainly back down, and they've hammered this thing. So 51.18 is going to get retraced. And certainly you want this $50.21 low of August 19th, 2011 tested, and still a buck high out there. So you got to think that that's going to at least get tested too out here. So look at that. GMRC. I haven't looked at this one for a while, so why don't we go ahead and look at that. GMRC. If I can spell correct. GMCR. Dyslexia, cure for found. Ooh, this is a very interesting pattern out here. Someone told me to look at this thing, and I hadn't had a chance to for a while. Boy, is this interesting. Let's look at the retracements on this thing. Okay. This has been a short crusher for a while, up today again on some news. And not much volume out here. I see what people are talking about. This thing has gone through its 618 retracement, trying to go back up and test the January 23rd high at 81.80. But 2 million shares going against 3.2. You got an hour left. So let's say this thing ends up with 2.2, 2.3 million shares. Going to need a lot more next week. And keeping an eye on that. Anyway, you can give me a call, 877-927-6648, or you can, I've got a couple in the den. Want to look at NEM and GDX. Anyway, we'll be right back with that in a minute. I think we should be going to break. Where's my music? I love my music. Come on. Music, music, music. There we come. It's sneaking in slowly. We'll be back. We'll talk about NEM and GDX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And as we come back, certainly I got a couple of people wanting me to look at a few things in the den. First, NEM, and what can you say? A company that was the largest gold miner in the world couldn't make it in the biggest gold run ever. Just take them out and shoot them. I think give them the chair. I think whoever runs this company, I don't know a lot about the inside of it. I have talked to a few people, including Tom. I've always heard that the worst managers in the world go to manage gold companies. They hedge at the bottom. They sell forward everything that they can at the worst possible time. And I've not been disappointed for the most part in 80% of the gold companies being horribly managed. NEM is just yet another example of a company that saw gold go from $300 to $1,800 and never could get out of their own way. So I don't know. Maybe it'll just go broke and we don't have to put up with it anymore. GDX certainly looks like we hit a high in gold, and I think we're going to have some movement. I think I've got another caller here on the line. Nope. No. Okay. But we'll take a look at it. It certainly looks to me like it's gotten to confluence. Let's zoom in here a little bit more on GDX. Where's it at there? And what else can you say? 3 years. That's why. Let's get there. There we have it. It's certainly gotten a confluence levels. It hit it, tried to go back up into it today. You've got one or two things. You're going to get an ABC back down, and then maybe you got an opportunity to bust this on the next ABC up, or you get a little bit bigger pullback. But maybe this thing goes sideways for a while and finally wrestles through that $24.25 area that is a very good confluence. But I tell you what, these confluence levels are working absolutely fantastic about picking out where you want to buy. So if you bought at $20 and you sold at 24, I think you had the trade of a century, and you should just be taking your cash and waiting for this thing to pull back and give kind of a signal. Just a 50% retrace would take you to 22.22, and there, if the volume's light, maybe you want to get back in. I know that everybody's really bullish here around TFNN. I just think you got probably all of the move there, and probably the best thing to do is take your cash and wait for the pullback, or wait for the breakout and wait for the pullback, because that 24.50 is going to be support, and if it breaks out, it's probably going to come right back down to that 24.50 where you could buy it again. So for the most part, I think we've probably had the easy money off the floor in gold, and now we have to start looking at whether or not we can wait for the pullback. If you are a long-term bull in gold and you think you've bought the low, then you probably want to close your eyes and go sit on a mountain somewhere where there's no internet or pundits like me talking, because probably in a couple of years you're probably looking at $2,400 gold. The question is, just can you get through this time period when you look at it so closely and so tightly? I think these small moves, these fluctuation in gold, probably a thought that is, to tell me the truth, I just don't understand trading gold on that short a time frame. On the long time frame, I think you're fine. On the short term, you're waiting for a pullback. Anyway, I want to thank you all. See you in the 4 o'clock hour on the Tom O'Brien Show. See you then.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.